Gold, the safe haven metal, has fallen down and crashed like anything. But the question is not just how much, but the question here is also a big why. And another question that might be haunting the investors and people buying gold and who have bought gold, that will the prices of gold recover at all? Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh, and in today's session we are going to discuss in detail and understand that what exactly is the reason for such a crash in the prices of gold, why silver has followed the same trajectory, and also understand if there is any possibility at all for the recovery to be made in the prices of gold. So let us begin with understanding the numbers that we are looking at so as to understand that what is the level of crash that we are talking. So as of now, what we are seeing that gold prices are down by 30% if we compare it from the peak that we saw in January 2026, and if we look at silver, the decline has been more than 50%. And because of this, what we are seeing a sharp correction, because as of now, the prices that were going up for especially the safe haven metals, silver and gold, they have seen a sharp correction, especially when they saw a huge upward going trajectory in the last year of 2025. So if you see in the given graph itself, you will be able to see that if we are looking at 2025, then we see that yes, there has been a sharp rise, but a lot of correction has been coming in. The only period that you will see that have marked higher end of prices of gold have been where you see the maximum geopolitical chaos and uncertainty, and again we are moving towards a decline, or more clearer term here would be correction of the prices. Now the first question here is, why is this happening? Geopolitical chaos might have dialed down a bit, but a lot of uncertainty remains. So what exactly is driving this gold price downwards? So let us understand all of them. So the first factor here is that how US behaves. US sneezes and the world catches the cold, and this is exactly how I can summarize this whole why for you. But let us break this down first. So the first thing that we are seeing that when we are talking about US Fed Bank, as of now, what we are seeing that market is expecting from them that the interest rates will be increased. Now, up and until now, US maintained a very neutral stance, speculative stance, US Fed, but at the same time, in the coming meetings, the market is expecting, because of the inflation, that US Federal Bank would be increasing the interest rates. Now, how interest rates are related to gold prices? Let us understand. Let's just say you have 1000 rupees, you want to put it in the bank. If the bank is giving you only 2% of interest, you might not want to put that in bank, you might want to buy gold. But let's just say the bank decides to give you 10% interest rate. That's where you will feel, okay, I want to invest here, this is something that will get money and this is something secure as well. So in this context, that is exactly what is happening with gold, because we are expecting that the interest rate hike will come in. Investors are eyeing that side, and that is why we are seeing a dip in demand of gold, and that is why prices are falling. Another factor that comes in here is the strong US dollar. Now, if you look at the dollar index, it is at an all-time high as of now, and what lies in front of us is the fact that dollar as compared to other currencies outside US is something that is in a stronger position. So let us take example of rupee to understand. Let's just say if $1 is equal to 80 rupees and you want to buy gold of $1000. So how much you are putting in gold? 8,000. But now that US dollar is stronger and it is this price, how much you are putting in gold? You are putting, this will be this number, sorry, for the same amount of gold that you were planning to buy. So if dollar is stronger, that means you would have to spend more money. So economies outside the US, they will find gold more expensive, and that is why global players are shying away from buying the gold. Apart from that, inflation is the main driver for this very thing. Whatever unfolded in Middle East and it still has a lot of uncertainties, be it what will happen in Lebanon, be it the finality and execution of what US and Iran have signed, we still need to understand what will unfold. But at the same time, what has been done has put the globe through an energy price shock, which has put a domino effect outside. That means the prices will be rising. Petrol's price increased, the packaging prices increased, plastic price increase, food inflation, transportation cost, insurance cost, and so much more. Now, because inflation is something that cannot be dialed down immediately, this has further boldened the expectation that global national banks will be coming with a tighter money policy. Now, what do we mean by tighter monetary policy? Where the central banks will like to increase the interest rates, make credit very expensive. If the interest rates are higher, that means you get more on deposit, but your loans become more expensive. If you are taking out a loan, you have to give more interest rate. So in order to control the supply in the economies, it is expected that interest rates would be increased. And again, investors are eyeing this increased interest rate so as they get the maximum benefit out of it. And all of this ensuring what? That the demand of gold has dialed down. And that is why the prices have seen a huge dip. But the question here remains that does this mean all these factors cumulative? Does this mean gold is not a safe haven metal anymore? No, that's not the situation. What we are thinking that gold has lost the luster of safe haven is something that we cannot conclude on just this basis. Because traditionally we have seen gold prices will always increase when there has been a war or there is a situation of uncertainty. Why? If there is a storm, you will go towards the shelter, you will go towards the strongest possible shelter. And in a situation of any sort of economic chaos, gold is the safest place to place your money. So when we are looking at 2026, this particular moment, it is just the inflation that has dominated the investor behavior. Investors are preferring the places which can give them more money than gold, be it bonds and dollar assets. As of now, unlike just last month where US recession felt very near, investors were panicking, holding, clenching onto gold, the situation has dialed down. So have the fears of US recession as well. That is why what we are seeing that investors are okay letting go the demand of gold. And at the same time, another big factor in front of us, major driver of the downward movement of gold price has been the large ETF outflows. Gold ETFs have been withdrawn heavily. So as of now, the safe haven demand of gold has gone down, gold ETF holdings have gone down, and that is why the selling pressure is immense, leading to the down price we are seeing. But that is something that we can only clock it for this particular time period. What comes next still remains to be understood, and it would be too early to mark that gold has failed as safe haven completely. As of now, yes, but what will come next, we have to yet discuss that in detail. Now, what are your thoughts? Before I put up what are the things that might come in, my conclusion to it, let me know your thoughts on this. Do you think that gold will recover? Is there expectation that there will be better movement of silver or safe haven metals, or do you think there will be further sharper corrections? Let me know in the comment section. Now, the second thing we need to understand here that it was not just gold that saw the fall, it was silver as well. And when we are talking about silver, the correction has been more sharper. That means the downfall has been more than 50%. And as of now, when we understand the demand of silver, it comes from two things. Speculation, yes. Industrial demand does also exist for silver, and it is the industrial demand concerns that have amplified the decline that we are seeing. So when we are looking at a safe haven asset, gold is yes, silver is a part safe haven asset. Gold has limited industrial use, silver has an extensive one. So silver, the correction has been higher, but the probability of the demand to stabilize, this is also higher because silver has a proper industrial use. which cannot go away, especially in the times when we are moving towards renewable energy, concentration towards semiconductors, and so much more. Now towards the last question that remains, that is gold going to see a recovery? So here the answer is a probable strong yes. Why? Because there are multiple recovery catalysts that are in front of us which ensure or which shows the way that gold might see some predictability. First big factor here is, it is not a great news, but it is a factor that we are yes looking towards an economic slowdown. What unfolded in Middle East has sent ripples across the globe, and rising recession risk may actually revive the prices of gold. Whenever there will be fears of uncertainty, an economic slowdown, global slowdown, investors will still go back to the best safe haven asset that they have, that is gold. Second, yes, we are expecting tighter monetary policies, but if in future, let's just say 6 months into it, there is any monetary easing at all, that cut will directly support the demand of gold, and as soon as the demand rises, the price will too. Third factor, and the most real factor, as I said, there is no conclusion yet to the geopolitical uncertainty in Middle East. That remains. Russia-Ukraine still not concluded, and the trade tensions, putting this tariff on one country, taking away one tariff from another, blocking China, and so much more. It can start whenever, however. We don't know where Donald Trump will decide to wake up tomorrow. And we also have to focus that central banks, especially ours, they are moving away from dollar. They want to reduce their dependence on dollar. If you want to reduce dependence on dollar, what is the second best thing? An alternative that gives you a proper safety. Gold. It is not just our bank which is moving towards gold. Multiple other central banks are eyeing towards better buying of gold, which will ensure better diversification to them. Yes, in future, the luster of gold and the prices might return, but the reasons for it will return will be again chaos only. It will never be in the time of normalcy. Now that was all from my side. I'll be leaving you here with a prelims practice question. Let me know the answer to this in the comment section. I'll be waiting for your answers. Thank you so much.